Hello guys and welcome back to the channel. So in this video I want to talk to you about that there is a new hot stock in the financial YouTube space. At least the creators that I watch, there seems to be a new stock, and I am not buying into this hype and I am staying with Palantir. So I just want to give you my raw thoughts in a short video, and I hope that this will help you get some new viewpoints about investing and how I think, and if you think you agree with me or these guys, it's up to you. So as always, if you like this video, please make sure you hit the like button, and please make sure you subscribe to the channel and come and say hi to me on Twitter. Vince is bullish. It's soon going to overtake my YouTube channel, so it's going really good over there. Must be doing something right. Anyways, so this stock, the latest new hype stock, is Robinhood, and I saw that Arnie is very interested in this stock. And Arnie, I know you're watching this video, and Amit is buying into this stock, and let's see how many of the other finance junkies are going to buy into it. So I'm definitely not into this, and I just want to show you why. So first, I want to show you Amit's thesis about the stock, and it's actually a very good thesis, but I just need to shoot a couple of holes in it. So his point number one is we are transitioning from a bear to a bullish market, as JPY will eventually cut rates in 2024. If he does not cut rates or waits too long to do so, this thesis could be wrong. Assuming we are heading into a more bullish market over the next 18 months, Robinhood should benefit. So I wholeheartedly agree with this. Robinhood was the home of the retail traders, and those people basically died out of the market. And as interest rates, I think, even just stop going up, it's going to mean that those folks, as the market is now rallying again, they will come back, and this will increase the revenue of Robinhood very, very much. So I wholeheartedly agree with this observation. Number two, Robinhood is a company that makes money from payment for order flow. Risk of getting banned is slim, given Citadel is a huge client and they won't let the government ban it. More users, more trading, more revenue for Hood, which is why the bear market sucked for them. So here is problem number one. So when you are talking about that your company has one client and there is even a risk that the government could ban your trading, I don't like those trades. I like for sure investments, and I want to invest into companies that I know that are going to be around 10 years from now, 20 years from now, 30 years from now. This is why I invest into Palantir, because there ain't no way they're going away. I love investing into Tesla for the same reason, and this company actually has a question mark to it. Like, I understand it's very unlikely, but still there can come a time when the government says, yeah, this payment for order flow, you're kind of scamming people because they think it's for free and it's not really free. And so this is a really big red flag for me. Number three, the average revenue per user, ARPU, increased to 77 from 66 in Q4 of 2022, in one of the most bearish quarters last year. They are finding a way to generate more money per user with products like Roth IRAs and share lending. So yes, this is very bullish and a very true and good point. Although I want to show you exactly what he's talking about. It is somewhere here. This is the chart. You can see average revenue per user, and you can see it's a very nice uptrend. However, this is their monthly active users. It's a huge downtrend. This is the top of the retail bull market, and you see that the retail guys, they have left the market and said bye-bye, and now there is a slight increase because the market was going up. I'm pretty sure that those people were coming back. So number three is a good point. Number four, they are 3 cents away from being GAAP profitable. Profitability isn't everything, but for a little meme stock brokerage app to turn to a profit at this valuation shows their commitment to financial discipline and managing growth with profits. So this is again another good point. If they manage to become profitable, I guess Arnie recently saw a stock that turned GAAP profitable, and what happened to the stock price? But Arnie, my friend, don't get addicted to this, because I don't think every stock will react as Palantir did when they turned GAAP profitable. So watch out there. Number five, by canceling a financial award rooted in stock-based compensation, think of it like a sweetheart stock deal with similar to something Elon got in 2019 when Tesla met certain metrics to their co-founders. They reduced diluted share count by 35 million shares. SBC is also trending down, now at 26% of revenues. So I think SBC for this company is huge because when you look at the reports, it's not a growing company anymore. So that is huge, and it's very good that they canceled this deal, and I can see why that is a bullish indicator in the sea of indicators. Like it's a bullish thing, but yeah, stock-based compensation is very high. Number 6, cash is 6 billion on the books and their market cap is 8 billion. Again, a different valuation. I'd feel different, but when the cash is approaching the market cap, it looks more exciting. So you can't really argue with this point. I actually did not believe this point. So I went into their Q10 10Q form and was looking at, because I was like, okay, this cannot make sense. Maybe Amit is talking about that they hold 6 billion in cash for their customers, and then so they have an asset of 6 billion, but they also owe it to the customers. But no, I actually went through their balance sheet, and it is correct. They freaking have a net cash of 6 million with no long-term debt, very small short-term debt. So very, very nice balance sheet actually. So this is a major, very, very undervalued stock if you ask me. So this is a very good point. Transaction-based revenues increased 11% sequentially to 207 million in a horrible quarter for the markets in Q4. When the market gets good again, the volume of activity will go even higher from the 11% increase during a bear market. So this is probably true what he's saying. Number 8, they are the number 6 on the iOS App Store. People really love this app. I've used it for 5 years. I cannot ask for anything better. No one is going to use SoFi or Webull or whatever over Hood as a new investor when they get their hands on the app. The product is a major part of the moat, in my opinion, which is a controversial take, but a good product really does matter, especially for Gen Z when they download it for the first time next year. So again, good point. I'm in Sweden. We don't have Robinhood, and I wouldn't even use Robinhood if I had the chance. But I watch a lot of finance YouTube, and yes, I see it's a very sticky app, and a lot of people are using it. So it's a very good point. Number 9, Hood gets money from partnering with other banks to be able to give that attractive 4.65 rate to customers. Net interest income was 208 million last quarter. So if rates stay the same, net interest income can increase. If rates go down, then stocks go up and more people invest, which means more users and more payments for order flow. At this valuation, they are primed to take advantage of whatever happens. Sort of. I mean, if the market doesn't go up, they are not a growth company. Like if you look at their charts and everything that they are showing here, this is the monthly active users, right? So yes, I mean, if they get a little bit of net interest income, honestly, who cares? Because, you know, why would you buy this company? Then just, you know, put your money on a money market fund and just get that interest, right? And every other number, you know, that you look at is stagnating or going down. So I understand theoretically they're ready for anything, but trust me, Amit, I think they want the market to come back. I mean, look at this, transaction-based revenues. I mean, look, does this look like a growth company to you? And this is not even what, like Palantir has a slowed growth, right? This company is 8 quarters of just straight downtrend, and you know, maybe you could argue that they bottomed here, but still, I mean, you just have one good quarter here, so can't really argue that. So number 10, monthly active users was on the downtrend for a year. It finally went up last month by 400K. As we enter a better market, this should continue to rise. Vlad is a product mastermind, and this valuation is very, very attractive. So I agree, when you have net cash of 6 billion, you almost basically buying cash, and the value of the company is 2 billion. So the valuation is very, very attractive. And I even agree with Amit's thesis, but I'm not buying into this stock for one big reason. I'm a very, very long-term investor, and on this channel, I want to be doing something that I feel the average Joe can replicate and do for themselves so that they can be successful at the stock market. And I feel that if you're trading in and out of stocks because this stock is going to be good, for the next year, because essentially this is what he's saying, that this stock is going to be good for the next 2 years and the valuation is so low, so I'm going to just buy it, ride the wave up and sell it. This is not long-term investing. And most of the finance YouTubers have a lot of time to do a lot of research and, time into these things. So maybe they can become good traders. As far as I understand, Chris Patel is, killing bank with his trading, but I think it's not feasible for 99% of the people who watch this channel and 99% of people who consume finance YouTube, and that's a very big problem, I think. So this is why I want to speak out against it, because if you don't have time to research stocks, then just buy index funds, right? And don't care about this noise. If you have a little bit of time to research individual companies, then be a very, very long-term investor. And what you can do is you can, build conviction in a company that you can buy for the next 10, 20 years. And you need to do the research, the big research. Let's say it's 100-hour research. You do it once, and then you buy into the company or you DCA into the company. And then all you do after is you just follow how the company is doing. It's minimal effort. And people who have jobs, who have companies, who have kids, who have families, they're able to do this minimal job, okay? But if you're going to trade on a stock, you have to constantly do hundreds of hours of research on hundreds of companies, and then you have to update yourself, and it keeps changing. And most of you, I know I talk about this a lot on my channel, but most of you are so much, 99.9999% of you are better off making just more money at your work and then putting that money and investing at a lower return. I know it's so counterintuitive. I told you my story that I was a technical trader 2 years ago, and I made I did this whole math on it that I shared with you on my video, but the point is that I made 30% when the market was making 20%. But because my portfolio was so little, the extra 10%, I'm not giving you exact numbers, but let's say it was like $10,000. But for those extra 10,000 hours to beat the market, I was spending, hours every day, and then I was spending hours on the weekend. And in the end, I added up those $10,000 and how many hours I worked, and I saw that I would have been better off working at McDonald's and just saving that money and putting that into the index. And people get really blinded by that they want to chase and get 100% return or the highest percentage return. But that's a fallacy. You want to earn the most money. What would you rather have? A 10% return on $1 million or 150% on $1,000? It's way better to earn 10% on $1 million, which will net you $100,000. And most of you who watch this channel, again, you are better off just focusing on your work, do what you're doing, do better what you're doing, and either buy index funds and never have to think about stocks again. If you want to buy individual stocks, then do the research once. Put in the 100 hours, do the research, find amazing companies that are going to be here in the next 20, 30 years. And I'm telling you, those stocks that you will pick will probably 10x, 20, 30x. And yes, you will get some wrong, but the ones that you get right, they will more than make up for it. And this is why I just stay with Palantir, I stay with Tesla, I stay with the stocks that I know, and I don't even look at this shit because it's too short term. And again, 99% of you watching this will do better taking the same mindset as I'm taking about this now. So I hope you like this video. I hope it gave you a different viewpoint. Thank you so much for watching. Make sure you subscribe to the channel, and I'll see you in the next video. Ciao, ciao.